We are now joined by yet another management on the back of Q3 results, and this time you're joined by Mr. Mayank Agarwal, the CEO of Gallantt Ispat Limited, who's now joining us on the results. Hi, Mr. Agarwal. Thank you so much for joining us. Mr. Agarwal, as I can see, your revenue has declined 4% on a year-on-year basis, and on a sequential basis also, it has remained very flat. What led to this fall?
Hi, good morning, and to you and to all your viewers, ma'am. Yes, revenue on a quarter-on-quarter basis, there is a decrease of about 4%, which is about 1,000 rupees a ton. And this is basically due to very low demand and pressure on the sales part in general in the steel industry in the last quarter. And we saw the anti-dumping duty again being extended by the government and enforced because of these reasons. So last quarter for a steel industry was not that great in terms of demand and realizations, and this decrease is basically due to that. However, when we compare our results on a year-on-year basis, so you will realize that EBITDA in absolute terms has increased by more than 10%. In last year, it was 515 crores, which is about 567 crores in 9 months this year. So there is a considerable jump in EBITDA, and there in absolute terms also, and in per ton of steel produced also. With till last year, the average was about 8,000, and this year the EBITDA per ton is 8,750. So there is an increase of about 9% in EBITDA. And this is basically due to the continuous capex on operational efficiencies, cost reductions, capacity utilization that we have been ongoing, because apart from capacity additions. So I would say that last quarter was, although there was a little bit of pressure due to reasons explained, but if we compare the performance of the company on year-on-year basis, I think it's very nice, with a reasonable jump in EBITDA per ton in absolute as well. And even in PAT, if we say, there is an increase of about 20% year-on-year basis. So I think we are very well placed in terms of the overall performance of the company on Y-on-Y basis.
Right, but then Mr. Agarwal, let's also talk about the expectation. Now, do you expect them to recover in Q4 FY26, or we are talking about recovery happening in H1 FY27?
Right from the beginning of Q4, in Jan first week itself, we have seen a very reasonable turnaround. And the entire Q4 till now has performed exceptionally good in both in terms of demand scenario and both in terms of price. So we are very happy with the way things are going in Q4, and we see exceptional results in Q4 if everything goes well. And there would be I feel that there would be a substantial increase in the entire year's performance compared to last year post Q4 results.
Mr. Agarwal, also tell us, how has your demand been across segments and across product categories, your sponge iron, the MS billets, the TMT bars?
So demand in Q3 was very lagging a lot, but in Q4 it is exceptional. And also, we are not selling any of the semi-finished product, intermediary products. So we are only into selling of the finished product, which is TMT bars. And because in the last couple of years, with various celebrities and brand ambassadors like Ajay Devgan, etc., company is very well placed in the market in terms of brand positioning and in terms of demand. So that side, even in Q3, from personal perspective, company did not feel a lot of heat, because at least we were able to liquidate our production smoothly. The only problem was the realization, which was beyond our control. And keeping the EBITDAs intact and stable for a longer forecast in future, the company has plans of about 3,000 crores of capex, which we plan to mostly fund from internal accruals.
And sure, Mr. Agarwal, quickly, given the Q1 and Q3 trends, what is your guidance for revenue, EBITDA margin for FY26, and what about FY27 then?
See, it is being in steel industry is a little difficult to have a very long-term perspective. But in general, due to heavy spendings in infrastructure and the way things are going with the government in terms of budget, in terms of industrialization and manufacturing focus that the central government has, and being in two major markets of India, which is UP and Gujarat, where our manufacturing facilities are and where most of our product is getting consumed. And as you are aware, both these states in itself are very strong with their infrastructural spendings, etc. I see a very bright future for steel fraternity in the next couple of years. And besides that, what basically as a company we can do is to further integrate our processes, reduce our dependency on the market in terms of raw material, and improve our operational efficiency. So on those aspects, company is working a lot. Just in current year,
Right.
we have acquired two iron ore mines and for UP in UP and another mines in Rajasthan.
Right.
So we are working on complete end-to-end integration, reducing our cost efficiency, improving our efficiencies while adding capacities also.
Right, point taken, Mr. Agarwal, but we are completely timed out on this, that discussion. We will let you go on that note, but thank you so much for taking the time out and
Thank
joining
you.
us on ET Now.